If you've ever deployed to a combat zone, you've probably heard those three magic words, tax-free pay. It's, one of the biggest financial perks of serving in a hostile area. But, and this is a big but, for some folks, especially commissioned officers, you take a look at your pay statement after deployment and, wait a minute, you still paid federal income tax? What's going on? Okay, let's dive in and figure this out.
This is the big question, right? And it's a super frustrating one. But here's the thing. It's probably not a mistake. It's actually the result of a very specific and, let's be honest, often misunderstood rule that's kind of buried deep in the tax code. So today, we're going to pull that rule out into the light and break it down piece by piece. All right, here's our plan of attack. We'll start with the basics, what I'm calling the exclusion rules of engagement. Then we'll zero in on that critical pay cap. From there, we'll look at how this plays out differently for officers versus other ranks, cover some special cases, and finally, show you exactly how to verify your own pay. To really get why the exception exists, we first have to get a solid handle on the rule itself. So what are the fundamental rules of engagement for getting your pay tax-free? Well, let's go straight to the source. The official term for this whole thing is the Combat Zone Tax Exclusion, or CZTE. And everything we're about to cover comes directly from IRS Publication 3, the Armed Forces Tax Guide. This is the definitive rulebook for military tax stuff. So this isn't my opinion, this is the regulation.
Now, on the surface, the rules for who's eligible seem incredibly straightforward. Step 1. Be a member of the U.S. Armed Forces. Check. Step 2. Serve in a designated combat zone for any part of a month. That's it. You meet those two conditions, the benefit is supposed to apply. Seems simple enough, right?
And the exclusion looks like it covers pretty much everything. Your basic pay, your imminent danger pay, even stuff like re-enlistment bonuses and parts of your student loan payments. It looks like the whole shebang is covered. So what could possibly be getting taxed? Well, this is where we find the catch. And this brings us right to the absolute core of our explainer today. We're moving from that general rule to the critical exception that catches so many people completely off guard. This is the key. The whole idea of tax-free isn't always 100% tax-free. For a very specific group of service members, there is a hard ceiling, a limit on how much income can actually be excluded, and it's tied to a really surprising benchmark. And here it is, straight from the source. It all comes down to Internal Revenue Code Section 112. Commissioned officers are limited to the highest rate of enlisted pay. Now let's pause and really think about that. The cap on an officer's tax-free pay isn't based on their own pay. It's capped by what the most senior enlisted member in the entire military makes in base pay. We're talking about the Sergeant Major of the Army or the Master Chief Petty Officer of the Navy. Their pay plus hostile fire pay creates the ceiling. Any amount a captain, major, or colonel earns above that cap in a given month, that's what gets taxed. This is the officer cap. So as you can imagine, this creates a pretty clear dividing line in how combat pay gets treated. It's not a small difference in the rules. We're talking about two completely different tax situations, depending on your rank. This table just lays it all out, plain and simple. For every enlisted member and every warrant officer, and yeah, that includes commissioned warrant officers from CW02 up to CW05, 100% of your military pay is excluded. No cap. End of story. But for commissioned officers, that cap is absolutely in place. Every dollar earned above that specific ceiling is subject to federal income tax, just as if you were sitting stateside. Okay, now that we have the officer cap down, there are a few other little details in the law that are important for everybody to understand, no matter what your rank is. First off, it's so important to know that the CSTET only applies to income tax. We're talking federal and, in most cases, state income tax. What it does not apply to are FICA taxes. So you will always see deductions for Social Security and Medicare on your LES, even in a combat zone. That's totally normal and 100% correct. The timing rules are actually pretty generous. Get this, if you spend just one single day of a month in a combat zone, the entire month's pay becomes eligible for the exclusion. On top of that, if you get hospitalized for an injury or illness that you got in the zone, your pay stays tax exempt. But there is a time limit on that benefit. It expires 2 years after you've officially left the combat zone. So we've covered the rules, we've covered the cap, we've covered the nuances. Now for the most important part, applying all this knowledge to your own finances. It's time to become your own pay auditor.
Now, your finance office is supposed to apply all of this automatically, but you should never just assume it's been done correctly. The system is complex, and hey, mistakes can happen. So at the end of the day, the responsibility really falls on you to check your leave and earnings statement, your LES, and your W-2 to make sure your pay was handled properly. The most important thing is knowing where to look. So on your LES, find the Fed Taxes block. The key box you're looking for is Wage YTD. That's your year-to-date taxable income. While you're deployed, if you're enlisted or a warrant officer, that number should just stop increasing. It should freeze. If you're a commissioned officer, it should only go up by the amount you earn above the cap each month. If that number is still climbing by your full pay rate, that's a huge red flag. You need to contact your finance office immediately.
We've laid out the regulations, we've done the math on the officer cap, and we've shown you exactly where to look on your own pay documents. So the only question left is the one you have to answer for yourself. Armed with this information, does your own pay statement make sense?